Hello traders, welcome to the video. In this video, I want to show you another powerful strategy that you can use to scalp the boom and crash market. So this strategy I'm about to show you is one of the best strategies that I have used so far in trading. Strategy will help you to avoid fake outs and then consolidation market and make you get a more perfect and accurate entries. You just pay attention to everything I do and then you should take note if possible. I don't want this video to be too long, so I will quickly head straight. If you look carefully on my chart, this is 5 minutes time frame and this is boom 500. And if you look down here, I have just 3 indicators. I have moving average over here, I have relative strength index, I also have moving average on my main screen. Don't worry, I will show you settings to all these indicators. This strategy works for all boom and crash markets, but it is very effective on boom and crash 500 and 600 markets. So if you are trading this strategy, we are using 2 time frames. We are using the 30 minutes time frame and also the 5 minutes time frame. We use the 30 minutes time frame for our analysis and we also use the 5 minutes time frame for our entry. So don't worry, I will show you how you can trade both the boom and crash markets easily with this strategy. So first thing you need to do is to go to your 30 minutes time frame. So on your 30 minutes time frame, what you want to pay attention to is this moving average that you see on chart, this black line that it is inside the candles. So once you have it goes below, you want to anticipate that the next candle that we form will also be a down candle. So the next candle is what we want to catch when trading this strategy. So we will mark out our recent zones. That is the recent rejection that was created before market breaks to the downside. So you can see at this point low, high, and a low that break this low. And if you zoom in a bit, you can also have another low at this point. So let me mark that out over here. So if you are an aggressive trader, you can wait for it to break this one and anticipate that it will drop down. If you are a conservative trader, you can wait for this general low to be broken. See that this low causes this move up. This is on the higher time frame. It can be on the 4-hour time frame. And once it breaks it, you can look for your entry in the lower time frame. But you can see that this is a 30 minutes swing up and break over here. So once you have that, then you will drop immediately to your 5 minutes time frame. So in your 5 minutes time frame, you want to see this moving average enters into the 85 level of the RXI, which is telling you that the market is overbought and market will continue in a downtrend. And if you look carefully, we have combined it with the 30 minutes time frame for our better analysis. So you can see over here, once market close below or close below this general low, you can enter a sell immediately. Your stop loss can be at this high or this high, the high of the rectangle that was drawn, or this general high that you have. So once you have an entry, then you count 3 to 5 candles. 1, 2, 3. You have a spike, 4, 5, another spike, 4, 5. Then you will close your trade. You can see if you target 3 candle, you will take your profit at this point before you have this spike to the upside. So let me show you more examples so that you will understand better. 30 minutes time frame. I said let's use this place for our example. If you look carefully on my chart, we have a swing low that causes this one to the upside before you have the break. This is for the higher time frame, maybe the 4-hour time frame. And you can also choose the one on the 30 minutes time frame. You have a low, high, low, high, low, high, and you have a break. So once you have the break, you can draw out this level at this point. You draw the last wick, not the body but the wick, because the wick can also cause a rejection. Then you can draw out this one if you want. So you can just take from here if you are an aggressive trader, and you can just take from here if you are a conserved trader. So let's drop to our 5 minutes time frame and look for entry. On the 5 minutes time frame, we want to look for a close below that swing. So you can see over here, you have a close below. You can enter your sell and then your stop loss will be above this swing. If you look carefully, this is the first example that I drawn from the higher time frame. A close below, enter your sell, or you can wait to do a breakout and retest. You can wait for it to come into the middle of that block before you sell. I always enter here because markets can come like this and then continues to sell to the downside, and my stop loss will be above here, and then I will count just 5 candles, or you can count 3 candles if you want. You see 1 2 3, 1 2 3 4 5. Then you will close your trade, and you can see the market continues to fall to the downside. So it all depends on you. So you can see at this point also, sell, stop loss will be above here, then you count your 5 candles. You see the market did not come to the middle of the rectangle over here before it falls to the downside. So it just come, create a small candle, and then continues to fall to the downside. Why? I can also show you another way you can trade it. Let's say you have on the 30 minutes time frame, you have this swing low, this one, you also have another one at this point. You can enter a trade there, your stop loss will be above here, then you will hold your trade until when it falls into this point. So let's go to our 5 minutes time frame and let me show you. As you see the close below that rectangle, that wick, you can enter a sell, your stop loss will be above here. Market comes to test and then continues to fall to the downside. Then you can hold your trade until it enters into this level. So that is another way you can also trade this strategy. So let's go to the crash market and let me show you examples over there. Let me use the recent price movement for my example. So you can look carefully. This is the recent price movement. So in the crash 500 market, what we want to do is to pay attention to when the candles is above the moving average. You can see at this point. You can look carefully. We have a swing high, a low, a swing high, a low before we have the break to the upside. So you want to see candle moves completely above the moving average. That is the first thing you want to pay attention to. So once you have that, then you want to draw out your swing highs before you have the break. That is one. We also have another one at this point. There's another one here, but let's work with these two for our example. So we go to our 5 minutes time frame for entry. Once market closes above, you will enter your buy. Stop loss will be below this low. You see how market comes to test the middle of the rectangle and then buy to the next zone, or you can count your 5 candles, 3 4 5. Your 5 candles have been delivered. Then from this point you can also enter your buy. Once it closes above, you can enter a buy and count 3 to 5 candles. You can also target the next swing guy that is available to the left, this point, and close your trade entirely. So let me quickly show you settings to my indicator. First thing you do is to go to this indicator icon over here. As said, I have just 2 indicators. I have the relative strength index and the moving averages. To select the first moving average, click on the F icon on the main chart, moving average. Make your period to be 10, shift to be 0, method to be exponential, apply to close, style 3 pixels, select color of your choice. After that, click on save. To select the RSI, click on the F icon on the main chart, scroll down a bit, relative strength index, RSI, click on that, make your period to be 1, apply to close, style 1 pixel, select color of your background. If your background is black, you select black. If it is white, you select white. For the levels, click on this pen icon to add level, add, type 85 and 15, style, make it 2 pixel, and select color of your choice. After that, click on save. For the last moving average, click on the F icon on indicators Windows 1, moving average, make your period to be 5, shift to be 0, method to be exponential, apply to close, style 3 pixel, and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. For the zoom level, let's say this is the normal zoom, you zoom in 2 times, 1 2. First thing you do on your 30 minutes time frame, wait for the cross of the candle completely above the moving average, and for the bull market completely below the moving average. Then when you have your entry for the 5 minutes time frame, focus your attention on the RSI. Is it coming from the oversold level or the overbought level? Have it deep into those levels, then you use your moving average as confirmation to enter your trade along with the price action, which is a simple support and resistance level. After this, I want you to go back on your chart, backtest this strategy, then trade it with your demo account in a live moving market. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.